smart guy to just trick everyone, right?
Yeah. Then we learn
It happens.
this new way of being. I don't have to use all this body language, whatever's up here, whatever people could see on camera. makes real life interactions more difficult, I think.
Yeah.
No, I agree.
Yeah, what I don't like is seeing myself on camera when I'm talking to you. That's what I don't like. I like just seeing you guys. Because like in real life, I'm not looking at myself when I'm talking to people. So it's kind of that part about Zoom throws me off. So I'm trying to figure out how to deal with that. But let's get into it, guys. We're recording. And Demetrios, it's nice to have you as always. We're going to recap what we discussed, I think it was 2 weeks ago. And today's mostly going to be, we're just going to talk. We're going to look at some current events. We're going to look at some markets. We're going to see what that means for us as advisors, what that could mean for our clients. Some of the conversations that are happening right now, right? And what that means, right? There's a lot of capitulation happening. There's like in the crypto market, like, you know, I'm having loans being called, so I got to keep putting more money into the thing. And, you know, luckily Natalia and I are able to do that. But some people aren't. There's a lot of people that are caught in that and they can't. So like, and then that creates a problem. And we're going to talk about that and how that looks, what that actually looks like on the charts. So I think the first thing is there was a big inflation print. You guys hear last week, or I think was it 2 weeks ago or last week, that the United States came out with this surprising inflation number? Okay.
I think it was like 8 in the 8s.
Yeah, it was 8%, like 8.3% year over year inflation. Okay. So first thought I have about that is, okay, that's pretty high. Second thought I have about that is it's probably actually higher.
Yeah. Is it real?
Is that the real number or is that the manipulated number?
Yeah.
I know just looking at like what we spend the most money on as a household, it's food and it's gas and then living, like obviously our mortgage and stuff. But then other than that, second to that is then food, then gas, and then, you know, financial related stuff. But the food and gas is leaving less for the financial related investments and for the savings. And it's by a lot, the impact is a lot more than 8%. So when people talk about these inflation numbers, like it doesn't, what am I trying to say? It's like, it depends on the person.
That number?
It's like, yeah, how did you get that number? And how much of that number, like, is everyone impacted by that number the same? Or is that number going to have different impacts on different people depending on, you know, what their income is, what assets they have, you know, what tax bracket, a bunch of factors, right? What they spent, what, you know, what stage of life they're in, you know, what they're spending money on, right? Like, I think if you're on a fixed income, if you're retired and you're on a fixed income, you're hurting right now. Right. I think if you've been hurting and you're hurting a lot more now, you're staying at home, you're not doing anything. I think if you're invested and you were over leveraged, right? Whether it's a margin account in stocks or a margin account in Binance, and you're just like buying stocks with leverage, or you've borrowed against your assets, like I did, you could be in trouble right now, where you're panicking because things are getting a lot more expensive and the value of everything that you had has come down. So now you feel less rich as things are getting more expensive. Now, I think that's on purpose in a way. I think that's by design. I think it's a game to some people. And, you know, the people who can see it can prepare for it. And the people who can see it and take action can prepare for it, because I saw this and didn't really take action. And then there's people that have no idea that game's even being played, that this, you know, the price of Bitcoin and the inflation rate and how much money, that's all random. It's all just right? So. Yeah, like. I don't know. What do you guys think about this inflation number? And what do you guys think the impacts are on your clients and yourselves right now? Like, how is this like, what are your thoughts on this inflation? How's it impacted you guys?
Well, say in what you said about preparation, I stocked up on some food, started buying large amounts of food to freeze and store, almost bought a new freezer, going directly to farms instead of going to the grocery store, just because I'm like, you know what, I might need it, might be harder to find, and I don't want to be paying more in the future. Let me lock in today's price. There's a lot of things that you can buy now instead of later to miss out on that inflation. That's inflated price. But if everyone does that, then we might create shortages. If everyone buys a year's supply of one product, and that doesn't usually happen, we end up with a crazy amount of demand spike all of a sudden. So
Right.
maybe a bit selfish in that regard. But I'm seeing that interest rates are up, inflation's up. That's sort of the misery index.
Interest rates are up.
Yeah, like if we had inflation and interest rates were down and wages were going up, it wouldn't be that bad. But I don't think people are getting the wage increases they want. I don't know what's going to go on with fixed income if it's from the government. That would, be based on the tax system as well. Taxes might go up, inflation's up, and interest rates are up. So it's the maybe 10-year run of it being very easy to make money is now starting to change. And we might be looking back at what happened during I believe the 70s in the US. And I think it was the 80s or 90s in Canada. Sergio, I might want to pull up a chart and check that, but we've seen rates like this before. We've heard about it from our parents and our grandparents paying 20% mortgages. And that was 20% mortgages on a house that was not that expensive. Now we have expensive housing and high interest rates. So total different beast as well that we're dealing with.
It is a total different beast. There's something up with my keyboard. But if you look at this chart here, okay, so this is the cost of debt. Okay, as the chart goes up, the cost of debt becomes higher. As the chart comes down, cost of debt is lower. So we're in 2022 of June. So we're here where I've circled. And the previous high that we've had was in 2018. Okay. This is when the market was crashing a little bit. The stock market was crashing. Now in 2018, the yield held at about 3%. They held at 3%. I'm going to zoom in. Held at 3% and then came back down. Okay. 3% and then came back down. Now in 2022, we've taken out the 200 period moving average, which is this black line. So this is a 200 period moving average on the monthly time frame. So every bar here is 1 month. So this 200 period moving average has more significance on the monthly time frame, meaning it's more dependable as an indicator, has more significance on a monthly time frame than a weekly time frame, than a daily time frame, 4 hour, 1 hour, et cetera, right? So what we have is the 10-year actually just crushing that 200 period moving average, staying above it, and then price actually taking out the previous high. Right? So now you have a higher high. Okay, which is some would say that's a bullish indicator. Doesn't mean it's going to go up from here and it's not going to reverse. It doesn't mean that. But some would say, oh, this thing made a higher high. This is probably the start of a higher run higher, or of a run higher. Right? So when Matt, you're saying like things could be a lot different for the next, like past 10, 15 years, things was like easy money. So everything just went straight up. You could borrow and just buy real estate and you didn't have to worry.
Yep.
Maybe you're right. Like maybe us getting above the 200 period moving average on the monthly, getting above the 2018 highs, getting above the 2003 lows is a change in this market and what's happening.
Yeah, I mean, look at that. We've been below the trend line for so long. It's been like you made a mistake, you over leveraged, but don't worry about it. You've been fine. Everything's been going one way, and that's been your life. And
Right.
I can't tell you how many people I talked to, retirees, who bought a house and did what do I want to call it? They used inflation to devalue their debt, whether they realized it or not. They took a mortgage, 500,000. Now the house is worth $1 million, and inflation has made the debt that they owe worth less money.
Right.
And if you're an investor, you're a business owner, then you can make up the difference. And now the mortgage is going to become more affordable. Interest rates have gone down, but that doesn't happen anymore. You see a lot of people that are house broke and they want to keep that lifestyle. Lifestyle's high up on the list of priorities. That might have to change. And that's when people are really going to be upset. That's when people are really hurting. When it's numbers on a screen, it's not huge. But when you have to move somewhere and get out of the house you like to be able to buy groceries and fill up your car, that's when things get real. And I don't want to see that happen, but
I don't want to see it happen. Like I'm actually praying that this is a false breakout. And hey, let's say if it does happen, there's going to be opportunities there too, and people are just going to have to adapt.
Can I just good points here though that I think
please, yeah, please.
So, and I've been encouraging people to move out of the cities for the last 5-6 years. Okay, I foresaw
ahead of the curve.
Like I've foreseen a crisis like this happening, not like this specific thing, but like something similar, where something huge was going to happen, and here it is, right? And we're living through it. Our generation is spearheading it, right? Now, the reason why I'm saying, and I was been saying, move out of the cities, okay, is because for one, when you heavily populate a city, politically, you get a lot of seats in that city. So to make a change on a national level is very difficult. Too overpopulated, these little places, right? And these little pockets of overpopulation are dictating what the rest of the nation will look like. Right. So the best thing people could do is literally spread out and populate smaller places, like like larger places of the land, right? Like go to small towns and make them bigger, and that way the economy will re-strengthen in a way, right? Because you'll get more work places. Places are starting to expand, so there's going to be more work. And really, we're in control. The population is in control. So if you want to remain in control and feel like you're in control, challenge yourself. Get out of the city. Go find work elsewhere, right? Yeah. The city, there's a lot of competition if you think about it, right? So
there's a lot of opportunity, I think, too, in what you're saying. And
yeah, safer. It's quieter. You know what I mean? A lot of people nowadays are.
I'm happy.
Yeah,
like we moved. Like Niagara Falls isn't that small, but
still
much smaller compared to Brampton and much smaller compared to Toronto. And like I like living in Niagara Falls better.
Beautiful.
Just overall, like it. Yeah, it would be better if like maybe some of my friends lived here, my family lived closer. For sure, it could be better in that sense. But just looking at the city as a whole and just the cost of living and what's around us, like what we have access to, like it's pretty awesome.
Yeah, it's a no-brainer when you think about it, right?
Yeah. 100%.
Yeah, there's a culture change too. Like I've never wanted to live in a big city. I want some land. I want a farm. chickens, cows, like that's the dream. So I'm looking at where in Canada is that, where in the States is that. States is more spread out. They have different sort of cities, whereas we have Toronto and we have Vancouver, and then
Yeah.
maybe some stuff around there. And then you go Northern Ontario, there's nothing. Like 50% of Canadians live in this tiny little area on the south of the country. So how do we change that? We need to build some more houses. We need to make that easier. There's always red tape there. But I noticed that you go to Toronto and there's like a different culture. If you live in like North Bay or Sudbury and you drive to Toronto, it's like going to another country. And you got people there that don't have cars, and they pay more on rent in a condo, than you do on a mortgage on a full size house, and it's worth it for them. The values are different. So I think it's easier to go from small town to big city. You see opportunity, you're looking for a job, you want to go partying, things are close. I think that's easier than moving out of the city. And it's usually older people that are moving out of the city. So we only have so much influence, but if you want to live in Toronto, go ahead. Not for me. Not for me. But yeah, the towns
Well,
develop. You see these things, and we need builders. It's going to be harder for people to build houses. The building materials in the past few years have just exploded. New construction is going to be
Yeah.
more scarce. We're going to see that.
Well, all the logging companies, all the companies that have the raw material for building, they're all way out of the city, right? Yep. So you're cutting transportation costs as well, moving out of the city as well, right? So getting that nice farm and getting that nice built house on that nice sized property would be a lot more affordable than you think, just because you're cutting back on so many other charges in comparison, right?
Okay.
Property tax, if you want to have that kind of land in Toronto, good luck. See you on
Yeah. That's true. Sergio, pull that up again. You're looking at housing starts. What are the numbers here?
Yeah, I just wanted to where was I? Just see what, how many permits they're allowing and how many new builds are starting in 2022.
Yes, I find this fascinating. Like you have to get permission to build a house.
Yeah. And you see they're releasing the next, sorry, real quick, Matt. They're releasing the next set of numbers June 16th. So that's tomorrow.
Tomorrow. Yeah.
Yeah.
Okay.
Sorry, Matt, you were saying?
Yeah, well, I wanted to talk about it. Next week, we're gonna be talking about supply and demand and taxation. We don't have this prepared, but I think we could dive into the fractional reserve banking system. And I find when people really get into the economy and study it, they come up to me and they say, like, I've never realized how much control the people that I can't even name have. I don't even know who these people are. I didn't vote for them, and they have so much control. The first thing you do, if you're a first time investor, you go to a bank, you're getting a mutual fund. You say, what kind of rate of return am I going to get? I say, I can't promise you anything. No one knows what's going to happen. The people in charge are making decisions. Do they know what's going to happen? Well, they're influencing it. So that's where we look first. I think that's the biggest thing that'll influence the way that we operate in the market.
I think that whole thing of like no one knows what's going to happen is kind of, I don't know about that. When they first started the money printing in 2020 to deal with the COVID related stimulus or whatever, for the stimmy checks and these loans to businesses.
You just call it stimmy checks?
Yeah, I call them stimmy checks, stimulus checks. But they had to, like, they were saying how this wouldn't generate inflation, how this idea of increasing the money supply.
Yeah. So is that a lie? Or is that theoretically, if we do all these things right, you won't really see inflation, but we haven't done those things and you're going to see inflation?
given what I know about stuff, about economics and finance, and I don't know that much. Like I'm not like an expert by any means, but I based on what I know, more money in the system means higher prices. Maybe it doesn't kick in right away, but it eventually it's going to kick in. And that's what I thought was going to happen. I didn't know when it was going to kick in or when it was going to go away, but I knew there's going to be a lot of inflation. So I wasn't surprised when we got this 8.3% year over year CPI number from the US.
Yeah.
Wasn't surprised by
And-
it, but the headlines are like, oh, like we were surprised, we were wrong, like we didn't know. It's like,
I'm not surprised. I don't know who is surprised. I think we need to find someone that is surprised and bring them on here and ask them what the heck's going on here. Because
no one
that
talks about
is-
this stuff. Well, sorry, yeah, Matt, to your point, like I don't even find that financial advisors even talk about inflation that much.
It's a huge thing that I talk about. I mean, I think it's huge. And I mean, people need to realize that in order to see this, we have deflation and disinflation. But in order to reverse what we did with money printing, we'd have to burn dollars.
That's what's happening.
Don't really do that. What's happening? Who's burning dollars?
The Fed is burning the bonds now.
There we go. So that's sort of an extreme measure to take to reverse what we already did. And with the reserve, like with the fiat currency, I think a little bit of money printing goes a long way. When you do a lot really quick, you get a spike. You know, we need that spike if we're going to shut down the country. And then there's this long-term effect, and it compounds. You know, people always say, you know, you're 8% in the market, that's going to compound over time. Like the stock market, they say 8%. I don't count on 8%. I wouldn't say 8%. That's a little high. But inflation being 8%, how are you going to beat that? And then it's compounding. Yeah. That 8% blip is going to be felt for the next generation.
I actually fear, Matt, that because most of those gains from the COVID low was because of the stimulus, the extreme amount of money printing, and I hate to say it because, you know, let's just go back. I wouldn't be surprised if the NASDAQ goes back to the levels before we started that kind of money printing, which is in 2019, December, which is right here. Okay. Because it seems like if we had actual real economic growth since COVID started, I don't think there would be headlines about recessions and whatnot, right? Like I think the headlines would be positive or more positive. So for that reason, I think all the gains since 2020, and we're going to look at the S&P 500 because we looked at it a couple of weeks ago, but all the gains from the NASDAQ could be brought back to their previous highs. And then some people have been calling for lower. I don't know. I think it's a little too extreme. But for me, it's like, okay, I think stocks bottomed when they come back to their 2019 highs because the gains aren't really coming from an economic like productivity and real gains. Those gains came from the stimulus. Right. So if we look at the S&P 500,
artificial.
It's artificial. Right. We were talking last week that wouldn't be surprised if price comes back here to the 200 period moving average on the weekly time frame. And you know what? The 2019 highs are actually below that. 2019 highs are in this purple line. Right. So it looks like we're headed that way, albeit it's slowing down as it comes down. Right. So this momentum is slowing to the downside. Right. I think there's still potential for more pain. So if stimulus is really good, if stimulus was a good thing and actually fueled economic growth, then the stock market shouldn't come back down to the 2019 pre-QE, pre-COVID prices, in my opinion.
That's right. If we've seen actual ingenuity, new
Yeah,
things
like
be invented and new, if it
more
was,
productivity, more people working efficiently, all that stuff
yeah,
because of these technologies. And if we
it's
don't, if we
just
go back down
money.
to 2019, to me, it's just a submission, an admission that that QE didn't really do shit.
Mhm.
Like, what's the point? Like, okay, why not? If we're gonna go through all this pain anyways, why not have just let everyone go through the pain initially when the thing first happened? Not do all the bailouts and then let the cleansing happen now. Why? You get what I'm saying? It's like you print all this money to help, but you know, if the stocks keep coming down and there's recessions and and there's layoffs and all that, then did it really help or did it make things worse?
Yeah, and I think
That's the question. Did it make things worse?
we have this I don't know, I relate to it like your parents. Like if the government is your parents and you're like, oh, it's, I can't go to work for X reason, or I have this. There's some parents that, especially like here in Canada, we're a little more soft. I think some other countries are a little different. They say, oh, I'll bail you out. Like I care about you. I don't want to see you suffer. But that little bit of pain in the short term can be a lot better in the future. Right?
I agree.
I-
Yeah.
Like you make a mistake, you get into some debt, and your parents are like, okay, don't worry, we'll help you out. Instead
Doing
of
things
like,
carefully is how we learn.
say that again, sorry.
Doing dangerous things carefully is how we learn.
Exactly. And without the danger, we're not going to be careful. If you know that you're going to get bailed out if you mess up, it's like, whatever, no big deal. That little bit of risk can really have you do things right. And, there's Milton Friedman who'd say, you know, be careful with inflation. We need to have a free, open market. And I think the general public might not realize what a real free market would look like. There was a lot of outrage with auto companies getting bailed out from the government back in the day, and there's certain industries where the government just kind of says it'd be really bad for everybody if you did fail. So we need to deem you too big to fail and make sure that you're around to help us. But I don't know if that's really helping people in that way if we just keep doing the bailouts.
Yeah, I'm with you there. I don't think so. But I'm not 100% sure, right? I don't think they help, right? I think it's just they're helping certain people and it comes off as like trying to do the greater good for everybody. But
Yeah.
at the end of the day, like if you're going to reward people with like this kind of inflation and give people higher living expenses, more taxes to fund your bailout so you could protect everybody. I don't know about that. It's like, it's
Yeah. Maybe some are good, some aren't. I think it was, GM, General Motors, had a bankruptcy. I
Right.
don't know if they got a bailout or not. I'm trying to remember. I don't want to say one thing and be wrong
You're
on
saying
here.
GM?
Yeah, GM, they had a
Yeah, they
bankruptcy.
did.
Cleared out a bunch of. They got a
Yeah,
bailout.
yeah, they did get a bailout, big bailout.
Would they, without the bailout, would they have just collapsed? Would we not have that anymore? Maybe it's better that we have that American manufacturer and then Canada can benefit from that. It was an American bailout. Maybe that it was a good idea. Maybe some of them are good, some of them aren't, but it's just very interesting that you can get to the point where, I mean, no small business can say, hey, we had a bad year. We don't want to close up shop. Can we get some money? The government say no. But when you're GM, they say yes. It's really interesting. So, all right, let's look at Bitcoin.
Well, Bitcoin's like just we hit 20,000 on Bitcoin, right? So all-time high 69,000, current price 21,100. all-time low for this year, just above 20,000.
And we were looking at Exxon before this. Exxon, I don't know if you're going to pull it up. Exxon has lost 10%, and it was worth, what'd you say, $400 billion?
Yeah.
So that was a $40
Billion.
billion drop very quickly. Bitcoin, what percentage has Bitcoin dropped?
Now we're looking at like 50, 60% drop.
And it was worth
69,000. It was worth about 1.2 trillion.
So it's 600. What is that? 600 billion?
Yeah, it's now worth, let's just check so we know. It's lost a lot, dude. Crypto. Just go here.
Like Exxon is a very, very big oil and gas company. Bitcoin
Huge.
it went down slower, but Bitcoin has lost more in the
Dollar
market
value.
cap. More
So
dollar
far.
value.
Yeah, so
So
far.
there's more to come, right, Sergio?
Well, there could be more to come for Bitcoin, and there's definitely gonna be more to come for Exxon. Okay.
The worst is yet to come.
For me, when I see Bitcoin near the 200 period moving average on the weekly time frame, okay, so let's zoom out. Okay. For me, I just see, when I see price near the 200 weekly, when you see that its momentum is kind of, what's the word here? It's not diminishing because like this is pretty big. Okay. But if you start going into the smaller time frames, like the daily time frame or the 4-hour time frame, and you zoom out a bit, you just see how there's been larger peaks in the past. Okay. So if you look here, this initial move down, a little bit more powerful than this move down. Okay. But what's a little frightening is that the current move down is more powerful than the most recent move down. If you look here. Okay.
Mm-hmm.
But most of the time when the relative strength index, okay, I'm going to show you what that is. Okay. So what's an RSI? It's a momentum indicator. It's used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions. Okay. So it's not like a holy grail or like this. Just because something's oversold doesn't mean if you buy, you're going to make money. That's not what it means. Or if things are overbought and you short them, then you're going to make money. It doesn't work that way. It's just an indicator to see if something is overbought or oversold. So it says here, with the RSI, if the values are 70 or above, that means this thing is overbought, okay, or overvalued, as some may say. An RSI reading of 30 or below indicates oversold or undervalued condition. Okay. So if we zoom out to Bitcoin on the higher time frames, which is the weekly time frame, okay, there's only a few times where we were below 30.
Okay.
Right. So like here, 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 and here. Okay, so about four times, 1, 2, 3, 4 times in the past 10 years. Okay.
Okay.
So we're currently below 30. We currently have one of the lowest RSI readings on the weekly time frame that we've had since 2011. Okay.
Mm-hmm.
So when if you're looking at Bitcoin and you're thinking, okay, should I buy or should I sell? And you're an investor, the chances are in your favor, the probabilities are in your favor that you'll do better off buying at these prices than selling at these prices.
Got it.
Okay? Now, it's not a guarantee because there's a bunch of things that could happen fundamentally that could cause even more negative sentiment. And this RSI could even go lower to like 17, 14, 15. I've seen it.
Okay, now let's line it up. So with that first drop in the RSI, if you had bought then, perfect.
So right here.
Okay. The second drop, if you bought then, you're holding, perfect. The
Bought
third
here.
one,
You bought here. Sorry, I'm just putting the percentage gains from the time, even though the percentage gains probably won't be as high in the future, just to give you an idea of the signal that it produced. All right, and look, if you didn't buy, see all this?
mhm,
If you bought anywhere in that point, actually not anywhere in that point, I lied. You could have bought in some of these conditions, these overbought conditions, and you're still up. You're still up. Okay, but let's look at the other one. It's right here.
not bad. Okay.
So if you bought and hold, you would have made money. The other one right here in 2020, right? We were below 30. Actually, you know what, dude? We weren't even below 30 on that one. So I wouldn't count this one. We were above, we were at 34, which is pretty close,
Yeah,
but
it
not
was-
quite below.
It was low, and looking back, it was like the best time to buy in that period. Like if you had the money and you were looking, that was something to look at. So RSI, and now we might see it go lower, but this is the lowest it's been, it looks like.
That's right. In a long time.
Wow.
Right. So, you know,
So do you
but
think,
look, you see this on the up, you see this here, this price action here that led to this big move up.
Yep.
It's not impossible for it to do this and come lower, right? It's not possible. It can't do it. I wouldn't bet on that to happen, to be honest.
Yeah, well, we've seen it be higher and stay higher, especially
Correct.
during that period. What year is that?
Which one?
2017. That was a substantial year where people were buying. It was during 2017. That was a huge bull run. So I don't know, with Bitcoin, maybe we'll look at the RSI of maybe some stocks, but Bitcoin's been on the rise. People have been buying.
Correct.
So you might be right. Maybe this is a period of time where that RSI is going to hang low under 30 for a while, because loans are being called. A lot of people in the crypto world are leveraging, whereas I think that more people are leveraging in the crypto market than the stock market.
Well, no, there's more leverage in the stock market, but yeah, because it's a smaller market and these prices are more volatile, the rate at which those margin calls would happen would happen
thinking of the
faster in crypto.
average investor. I think a higher percentage of crypto investors are willing to leverage than percentage of people who have equities. Everyone has equities, but what are the chances that they usually have mutual fund, right? They wouldn't have any leverage. But I think if you're willing to get into the crypto market, you can stomach the volatility. You're probably also willing to take on risk with leverage.
Yeah. You see, what I like to see, Matt, as well, is you see things on the higher time frames, the weekly time frame, the monthly time frame. Then you go into the smaller time frames to confirm what you see, right? So what I see on the weekly is, okay, it looks like price is going into this 200 period moving average. Things are oversold. And it looks like momentum slowing. So, okay, how do I confirm that? So I go to the daily, the time frame, so weekly, then daily. And then I just try to see if there's anything that confirms that lack of momentum. And there is one indicator here. If you look at this low compared to this low, okay, it looks like to me, price made a lower low, but the awesome oscillator, which is one momentum indicator, did not. Okay. This is just one momentum indicator. It did not make a lower low. So that's typically what people call, and we've talked about this, bullish divergence. And that's typically a bullish signal. Okay. Doesn't mean reversal, but it does tell you that there's more buyers coming in at these prices than there were at 27, 25,000. Okay. And I'm telling you guys, there are people that have been watching this market for a long time, waiting for the price to get to this 200 period moving average. Okay, at 20,000. And the reason why I know is because that's a level that I've been paying attention to, or I've had as a possibility. I didn't know if it was going to happen. I wasn't sure if it was going to happen. But just from like a chart perspective, like 20,000, 20,000 made a lot of sense.
Yeah, I see where it touches that moving average. It goes right up afterwards.
Most of the time.
Things are different now. It'll probably go lower now, but then it'll,
Right.
I don't think it's a bad time to buy if you have capital, but be prepared to buy more later.
I think so. You got to
continue
continue
this
to
a
buy
year
in.
ago.
This is June 8th, 2021. When you zoom out and look at the price of Bitcoin, a move to 13,000 to 20,000 isn't that crazy. A lot of people thinking it can't get there. It can get there. And a lot of hodlers or holders would still be up 100 to 200% and more if it went there. If Bitcoin has a long life with us, which it most likely will, this chart here may just be a small blip in time space. I don't know if I could pull up the chart.
What was the price June 8th? What was going on? So you're looking,
Dude, and the thing that makes me angry about that is the price June 8th was,
show me.
I'm here, let's see, about 30K.
Wow.
Near the bottom,
Okay.
near the bottom for that cycle.
I think I was buying. I was like,
I was buying
up.
too.
It's not going to go. It's not going to go down. If it does, I'll just hold it. But yeah, I wasn't expecting this.
I bought in here.
Then I don't think.
I bought in here. I bought in here. Like I bought through this, even though I knew that 20,000, even 13,000 is a possibility. When I first did that post June 8th, look where the 200 period moving average was at the time. Look at what price it was at.
You're saying
13,000
was touching?
No, the moving average was at 13,000.
Oh, okay. Yeah.
Now because so much time has passed,
moving average is 20.
the moving average has creeped higher because the price has been higher. So now we're like at 22,000 on it. Okay.
Okay.
But the reason why I
why
like
200 period, like why is that the number that you pick? Is that
it's just an arbitrary number. It's literally, dude, you could do it with like 169, 144, 215, 300.
Yeah, I get that. But why is that what you usually use? You use 200? Do you think that's a good amount of time has elapsed to establish that price?
Yeah. It's like far out enough in the past where it's like significant, more significant than like a 5-day moving average or a 3-day moving average. It's a long-term moving average. So if you're thinking long-term in your positions, using the 200 period average makes more sense than using a shorter moving average. So I'm thinking longer term. I want to have a feeling of what's happening for the next year, next 2 years. So I use this 200 period moving.
And that's 200 periods. Is that 200 weeks that we're looking at right now?
Correct. The 200 average weeks. So if you go back 200 weeks from today, the average price 200 weeks ago is where we're at now, 22,300. Okay. At the time when I had posted that concern of us going to 20,000, I also said we could go to 13,000, which is this purple line right here. And we still can, right? We still can. And if you just do some basic measurements on this chart here, and I'll show you, it looks a little complicated. It's not that complicated, okay? But if you measure this structure, I'll show you. So this, and this, okay, those are two tops. if we measure those, where's my thing? If you measure those tops and you go down to this, the July lows, so 30,000 when people were buying, and it was a good buy, right? That collapses, that pivot point collapsed on July 30th of 2022. So if that level breaks, the high, like a target for the top is what you do is you take the height of this structure here. So this is one structure. Okay. And then you're going to chop it. You're going to extend the structure right below this breakout point. And you know it's a breakout point because price held there in the past. And then it held as resistance in the future. So here was support in the past, resistance in the future. So you know it was a valid level. So you take.
Okay.
Is it a lot? Is it a lot?
No, I get where it's close to 13,000.
Yeah, you take that symmetrical target. Let me see if I could do it. I'm tripping.
And go under where we see the support.
Hold on, it's just because my screen's too big here. And there you go. It takes you to about 13,000, 12,000.
Yeah. Wow.
Okay. So targets. Right? If we're not holding here, I'm expecting a move to 13,000. That would be max capitulation. That would be max fear. All the margins would have been called, and hopefully you have money to buy. That's what I think, because I don't think Bitcoin,
Okay.
from a fundamental perspective, is going anywhere yet.
Yeah. Yeah. If it reaches 13,000, I'd go all in. That's insanely low compared to what we've been seeing.
And it's just so many people have lost money by that time, right? So it just seems like a good time.
Yeah. And just to bring it back, when was the last time it was at 13,000? Like, it wasn't that long ago.
Wasn't that long ago, dude? July 2019.
2019. Okay.
And then before that, December 17th. Right? And you get below 13,000 and the game's over.
Why do you say that? What do you mean the game's over?
Well, that's just like a serious, like, if we get below 13,000 and we stay there for a few weeks, months, probability is we would just go lower.
Really?
Yeah.
And there wouldn't be enough support to hold us up there.
Yeah, I don't know. What do you mean? There wouldn't be enough support to hold us up there.
Like, why do you think?
Oh yeah,
That
the sellers
13,000.
the sellers would outweigh the buyers at those levels. That's the only thing that would have it not hold.
You think
It's just if that, like, psychologically, if that level breaks, a lot of investors and traders are going to be bearish.
God, and you
Psychologically,
think that could kill Bitcoin?
I don't know.
Are you saying that on record, Sergio? Is that gonna kill Bitcoin?
If we get below 13,000 and we stay below for like a month, 2 months, call it 3 months. After 3 months, I'll say it's over. That's what I would say. If we get below 13,000 and within 3 months we get back above, then it's not over. That's what I think.
Interesting. Okay.
Yeah.
I got that. All right. I won't forget this conversation.
Oh, well, we have it recorded. So
Yeah.
it's nice to actually watch these recordings and see the things that we were talking about and see how they progress, you know?
That's right. That's right. We looked at Exxon before the recording. We haven't looked at it yet. Do Tesla first. Yeah.
Let's look at Exxon. Let's look at Exxon. It's important. It's important.
Tesla and Exxon is a little bit different.
Okay. So first thing that I need to point out about this is oil companies have been sharing their earnings with the public recently, and people are angry because they're making too much money. Okay. So that's been the headline, I think, last week. Have you guys seen those headlines or anything new, any piece of news like that?
Not that specifically.
Okay. But like
I
the
don't
oil
just
companies
give
are making too much
news
money.
headlines all the time.
I have.
You have, right? Yeah. They, like, pretty sure they've been around like since maybe last week or even before that. But I started noticing them last week.
Yeah.
So Exxon Mobil, let's just call it one of the major oil and gas companies, right? There's a few others, but Exxon's definitely one of them. We made a new high, so an all-time high, as that news was propagated. Okay, so Exxon Mobil made the highest highs ever made. Right around the same time, these guys had record-breaking profits, and it was on the media. Okay. In my opinion, that is sucking in the retail, and smart money, right? They're selling now.
Yeah.
Okay.
And the RSI
Yep.
lines up very high. Is that over 70%?
It's over 70%.
Yeah.
It's not the highest it's ever been, but it's over 70%. Okay. So, you know, if you're looking at a weekly chart, the 200 period moving average on Exxon takes us back down to $64. Okay. So if you look at a price target, that's about 34%, which for Exxon Mobil, they're shedding about like 130 billion dollars of more of value if they went down to that 200 period moving average. Okay. That's like the minimum target that I would expect Exxon to go to. Okay. That's the target I would expect Exxon to go to. If you look at the RSI on the weekly time frame, you see that the RSI has been at these levels before. Right? So here and here. Okay. So you have on the RSI, what you have is you have the bearish divergence. That's what it's called. Okay. And that just means price on this Exxon made a higher high, but the RSI, the momentum indicator, did not. Okay. So what do we have as information for us? Okay. So we have headlines and mainstream news. Okay. You have all-time high in price. Okay. And then you have bearish divergence weekly time frame. Okay. So I think if you're thinking clearly, you probably wouldn't buy Exxon. If you saw this stuff and you understood what it meant, you probably wouldn't be buying Exxon Mobil at these prices. Okay, you're thinking about selling, or you're thinking short, or you're thinking about easing your exposure, maybe if you're in like industrials, or if you're like in industrials or defensive stocks, military type stocks, they'll all come down pretty much with a company like Exxon. Right? So reduce your exposure there. And these are just ways to tell, like, you know, am I a sucker or not? And sometimes you don't think you're a sucker and you actually are, even still. Right? And it's happened to me where, like, you know, prices have topped out like this. They've made all-time highs. They've corrected 40, 50, 60%. I buy them and then they go down like another 60, 70, 80%.
Jeez.
Could happen. But I've never, in pretty much all my positions, have bought up here at the all-time high and got stuck with it.
Gotcha. Demetrios just said he has to hop off. Demetrios, do what you got to do. We're going to be done in a couple of minutes anyway. Thanks for joining us.
Thank you, guys. Have a great one.
Have a good one, brother.
Take care.
All right. So I don't know. I don't like, you know, and the S&P 500 is already corrected. The S&P 500 is corrected. NASDAQ has corrected.
Pull up the S&P or NASDAQ real quick, or Dow Jones.
Let's pull up Dow Jones
major
first.
index. Go ahead.
Flip Dow. See how much the Dow has come down. Dow's already come down a bit.
Yeah.
See, it's only down 17% compared to S&P 500, which is down how much?
I think more than that.
More
How
than
many
that,
companies are in the Dow?
I don't know. I don't know, to be honest.
Okay. S&P.
I don't even know how many companies are in the NASDAQ.
How many companies are in the S&P? I'm just joking.
Yeah, right. So you have tech is down about 32%, S&P is down about 28%, and then the Dow Jones is down about 17%. So if Exxon Mobil is just topping out now,
All right. I just checked. So the NASDAQ, that's a major stock exchange. That's 2,500 companies.
yep.
They're not picking and choosing because that's anything that gets to be on the New York stock, the NASDAQ. But the Dow is only 30 large companies. So what companies are seeing less correction than the 500 in the S&P?
Well, like,
So I might take a look at the list of the Dow and see, because
let's
they're
look
getting
quick.
hit less hard.
So Palantir's in the S&P 500. Okay.
Okay.
I bought Palantir at $20. Down
Yeah.
60% from there.
It dropped 60% from $20.
Yeah. So this is an S&P 500 stock. Okay.
Okay.
A Dow
okay.
Jones stock is like Apple.
Yeah, they're all.
Okay, Apple isn't
all
down
bigger.
60%.
No.
It's down about 26%.
Wow. Only
that's-
26%, sir.
Only
No big
20
deal. Only 20
From the highs, from the all-time highs.
Yeah, yeah.
Palantir's a lot worse because Palantir's down 60%, not even from its all-time highs, but like from a 50% drop from its all-time highs, a 60% drop from its all-time highs.
Yeah. Let me make sure I'm not mixing that up with another company. Palantir is oil and gas, right?
No, Palantir's technology.
Okay. What? There's an oil and gas company maybe with a similar name. So I think I'm mixing them up. They're a technology company. What do they do?
They do whatchamacallit? Like data analytics, data programs. They have
Okay.
different. Let's just go here real quick before we're gonna wrap up.
Something, yeah, something has people hold on to their Apple stock more than their Palantir stock. Maybe it's because I don't know what Palantir does. I know what Apple does, but I don't know right now. I don't want to make any recommendations on what to buy. I think if you want to buy something, buy food, storable food, firearms, ammunition, whatever you're going to need, propane tanks, barrels of gasoline, whatever you need is going to be harder to get and more expensive in the future. More important than ever, have 6 months worth of expenses in cash, liquid. That's really all the cash you should own. It's very devalued. And I want to get a list of stocks that we can rely on. And I wouldn't go all in on stocks, but things like Enbridge, I don't want to name any off the top of my head, but where you're not going to stop using natural gas to heat your house, no matter what's going on.
So it's late. Remember, markets are always forward looking though, right?
Yeah.
So when people are anticipating this inflation, these high levels of energy, for example, a stock like Enbridge is going to do very well as there's an anticipation for it. Okay.
Yeah.
But once the inflation already hits and it's coming and it's getting at its worst and people are complaining and it's all over the news, now it's like maybe that was the play and it could be a different play now. Okay. Enbridge, look at just real quick, and we're going to wrap up. Look at its 200 period moving average on the weekly. Okay.
Uh-huh.
We're a little stretched away from it, correct?
Yeah. Yeah.
Now let's look at tech, NASDAQ. Just real quick.
Probably
We're at it.
Yeah.
So now it's like, okay, like the Dow Jones and these more safer big companies, maybe now those are going to fall. And maybe the money will rotate now, starting back into maybe the cryptos and the tech a little bit. And just because they got pummeled already, like 80, 70, 90% from the highs. Enbridge,
Yeah.
Exxon Mobil, all those big companies like Costco, Home Depot, they're like 5%, 10% close to their highs. Right. And they've been going up until very recently. While those tech stocks have already been going down for a year and a half already.
I just think risk mitigation. I think these tech stocks could fall more. And I don't think the utility companies will. Enbridge doesn't look like it's at a discount. You're right about that. I pulled that out of thin air. I'm not saying that, but I think
Yeah,
we can
I
put
know.
together a list, and there might be different companies on there, but right now doesn't seem to be the time to go all in on any stocks, I don't think. And I think it's time to get ready to have everything you need and have that emergency fund. We got to look at the price of gold and silver again, because those are things that I always like to have, and I'd like to buy them at a good price. I don't want to pay more than I have to. So
Right. Very good.
Yeah.
Let's keep watching. I think gold, we did talk about gold last week, Matt.
we did, and I was disappointed in gold. I was disappointed in my grandpa's investment. My grandpa's a commodity.
Let's see, man. I don't think they want the gold price high. This is like I said last week, this is a huge warning signal, this double top. Right?
Yeah.
We're probably going back to the moving average here.
Yeah,
Let's just
I
see.
believe it.
But you're right, man. We've been talking about Wealth Wednesdays. Like, now is not the time to go all in on anything. Now's the time, if you are going to buy something, you're dollar cost averaging, you're buying little bits, because if price went lower, you could buy more. But to like go all in on anything, and we were talking about this
Very
since
risky.
August, dude. Like since August of 2021, we've been saying that.
Oh yeah.
I'm saying it's dollar cost average if you are going to get in this market.
Yeah, if any clients are coming to me with a large chunk of change, we're not
Yeah.
putting it all in. We're dollar cost averaging, and I'm saying, hey, is this everything you have? How much do you have in your savings account? And they say, oh, I don't want to keep money in my savings account. It doesn't pay me anything. I say, yeah, but you're not doing it for that. It's insurance. You're keeping that out of the market, out of risk's way, for when you need it.
That's right.
Not if you need it, when you need it. You're going to use it sometime.
Yeah.
I don't know if anyone never has to dip into an emergency fund. So you want to have it liquid. Would you recommend anything else than cash for an emergency fund, or just cash?
I think just cash,
Yeah.
You could go in like cash-like instruments,
Yeah.
but extra risk there. I don't know.
Mhm.
Like a lot of people put money in the money market funds and short-term bonds, and they say they're in cash and cash equivalents, right? So
Yep.
I don't know
Yep.
about that. All right, my lad, let's wrap up. I think we talked about a bit. I think we had some good insights. We'll pick it up the week after next, and we're gonna have a presentation. It's gonna be groovy.
It's going to be good. Yeah. Supply and demand next week. Talk about taxation, sort of the fundamentals, less charts that are new and recent, more time tested theory. So looking forward to it. All right.
Very good. All right, brother. Okay, we
That's a
talk
wrap.
soon.
All right. Stay on for like 2 minutes with me, but cut the recording.
Oh, shoot. Okay.